This is a curious market, but one that's being driven by a headline this morning on a Mag 7 stock in Alphabet. This is a name that you own. What do you think? Do you continue to own it?
Oh, yes, we do continue to own it. And good to see you, Tom. We've watched the Justice Department and other regulators come after not just Alphabet, but other Magnificent Seven stocks. And there's always a battle, and there's always going to be controversy about monopoly positions. But that's the basis of what social media is, and all types of digital communications. They're ubiquitous, and it's regardless of location, certainly not geography, and it has nothing to do with the companies attempting to have a monopoly. They are given a monopoly just because of networks that communicate worldwide. And that's a tough thing to prove from the part of the Justice Department that it was intentional. This was applied to them. And so it's not a nothing. Of course, it's a concern, but it isn't a reason for us to say we wouldn't want to own this stock. It's a stock that we own. It's trading at below a market multiple. And we believe that there's growth here from not just the search, but all of the other parts of the company.
All right, that's a big part of the micro story in the markets right now, company-specific ones. There's also a CPI print coming out and everything else today. I wonder if you might take us through, Kari, your word of the day and why you think that is.
Yeah, so it's two words, but short: déjà vu, and nod to the Paris Olympics. But we've been here before. We've done this. We've waited for a CPI. Here we are at about 6 a.m., 2.5 hours later. We've gone through this process over and over. What is the print going to be? And people have worried and panicked. This time, we've already seen the PPI come in at a reasonably low level. That's probably going to be true for the CPI. If it isn't, the market might panic a little bit today. If it's 0.3 instead of 0.1 or 2. I don't think that's a problem, because we feel confident that the Fed is going to lower interest rates at least 25 basis points, probably 50, because things are slowing. The economy is slowing, and the Fed needs to do that. It's had the effect, and it's brought down inflation from 9.1% to 3% roughly. And that's the reason that we can calm down and not, again, be so concerned that the focus should be entirely on CPI.
Given, Kari, that slowdown that you see is taking hold right now and the need for cutting rates, how exactly then do you put portfolio money to work? What sectors are you most curious about? Is it still big tech, or can we broaden out?
Yeah, I think it's important to think about areas other than technology, because, these companies have had enormous moves over the last year, over many years. And we still own Alphabet, we own Meta, we own Amazon, et cetera. And we like these stocks. But I think we can also look to other parts of the economy that perhaps are slightly more defensive, a little less cyclical, and have not participated as much. So healthcare is a name. We recently bought Abbott. We own Xterra. It's a utility that has a kicker with sustainable energy. That's been a good stock. Booz Allen and Hamilton Consulting Company does a lot of defense work. Thermo Fisher, again, healthcare. It's got lots of instruments, and United Health we like.